Good morning. It's Wednesday, the 10th of July, 2024. Please welcome, I'm welcoming you to another edition of pre market commentary. My name is Vijay. Yesterday was a very interesting day. We had an all time high on the Nifty, while we did not have it on the Bank Nifty. I'd mentioned yesterday that Bank Nifty could be doing well. It did close in the positives, and the broader market also performed well by and large, though the micro cap small cap indices did not make an all time high, but the S&P 500 and the Nifty Junior made an all time high. Now, this all time high on the Nifty came on relatively lower volumes vis-a-vis what happened last week. Yesterday, we did 1.35 lakh crore volume, whereas the previous day it was 1.45 lakh crores. We have typically been doing more than 1.15 lakh crores, so it is not alarming, unduly alarming at this point of time. Now, yesterday, some interesting things like Maruti shot up, I think, close to 7%, all because UP government decided that they'll give some concessions on the electric vehicles. So, the number of vehicles which are sold by Maruti is the highest in UP vis-a-vis other states. However, the number of vehicles sold in this scheme for which it's applicable is hardly going to be around 10,000 as far as my numbers go. So now 10,000 per year will mean around 1,000. Maybe now it's 15,000. Maybe it will be 1,500 per month. So I don't know how much benefit is there for this particular model, unless the Maruti introduces this dual kind of technology in other models also. But this is my basic understanding as of now. I could be wrong, but it is not something tremendous or big for Maruti stock to go up by 7%. But that is the nature of the bull market. Now, yesterday, both DIIs and FIIs were both net buyers. FIIs bought about 300 crores, DIIs bought about 1,500, and broader market money started pouring in. We also saw that the mutual fund investments last month, that is for June, which was released yesterday, was a humongous 40,000 crores. Now, out of 40,000 crores, 15,000 crores came in NFO, which is what I would call, new fraud offers. Basically, they are trying to remodel ways and means to get suck money out of the hapless investors who have been told that the NAV is only 10, so we'll start from here. But people don't understand. NAV of 10 means nothing because they have to buy a 24,000 index. Incidentally, Nifty closed at 24,000 for the first time ever. Now, a lot of people are scared, and a lot of analysts came on TV and said, things are getting hot, becoming scary and all that. But they are like the proverbial Hathi ka dant, which is the elephant's tusks are not meant for eating. That elephant's tusks are meant only for showing. So all these analysts and gurus who come and say, they manage funds, huge funds, but they will say, I will not sell any of my shares, or I will not close any of my mutual fund schemes, but market is overheated. Then what is the use of mentioning something like that? It is equivalent to Hathi Kedant. So you will have to discount these guys, because if the market falls, if not if when the market falls, they will come around and say, see, I told you so. So we have to protect our own interests, because none of these rascals will protect our interests. Like, you particularly use the word rascal because this is behavior what a rascal will do. Now, coming to regulators, SEBI's committee, which was supposed to regulate F&O, has come up with some outlandish, what shall I say, schemes, I would say. Now, the easiest thing would be to simply remove these weekly options, weekly settlements itself. We were happy with our monthly settlements. Now, SEBI has introduced it. Why? Because everybody wants to make money. The system wants to make money. They're not bothered about the retail investors. If you think retail investors are going to get benefited by any of the regulators, then I think you're barking up the wrong tree. Please remember, SEBI, NSE, RBI, everybody is out to see whether they will get enriched in some way or other and act as if they are regulating the markets. If anything, they will attack a small podcaster like me saying you're not SEBI registered. Incidentally, I'm not SEBI registered, but I am a citizen of India, so I can speak my mind, and I don't owe this to anyone. So now, yesterday, apart from the auto index, which was led by Maruti, which went up by about 2.5%, the index per se, we had also the consumer durable index, which went up by 1.7%, and the PSU bank index, which went up by 1.2%. Then we had what else? Okay, what happened to the global markets? European markets did poorly. US markets were influenced by what Jerome Powell was talking to the Congress today. Also, another part of the testimony is there for the other part of the Congress. So basically, what he said was that he gave a hint actually that these high rates will not remain long for a long time, will not remain high for a long time. So the market is celebrating. We had all-time highs in S&P and all-time highs in Nasdaq. Nvidia has again started its upward journey. So the orgy of buying will continue, and you can just enjoy it while the going is good. There's no point in trying to worry too much on this. I worried till 23,600. Subsequent to that, my analysis showed that this market is not only full of greedy people, it's also full of needy people. Now, I will do a longer session weekend as to what is this needy and what is greedy. But suffice to say that the needy people have joined in. Basically, needy people are people who do not have jobs and they want to somehow get money, make money. See, today, if you look at it, you've got IITs, IIMs, BITS Pilani, their graduates, not all of them are getting jobs. So they're all well educated. But what do they do? So you take some pocket money and invest in the market, or trade in the market, make some money, and then try to build something like a stable income. I've also heard of lots of doctors, professionals, 15 years experience, dropping out of the practice and getting into trading. Now, these are all anecdotal information. That doesn't mean the market will top out immediately. But whenever the market tops out, it will not be an ordinary topping out process. So, therefore, right now, the mood is sanguine, the mood is bullish. BTFD is the way to go. And I think one should just look at, doing that. Asian markets have opened bright. Nikkei was down at one point of time. Now it's about 55 points up. Hang Seng is up by about 80 points. Yesterday, Hang Seng closed flat. Oil is weakening, which is good for Indian market. Then you have gold and silver, which are flat. So the mood in the market is positive. We should go along as long as continues to be positive. For instance, there is some statistic which says that 24 days in a row, the market has not broken and closed below the previous day's low. That is some sort of a record. You need to keep that in mind. It is like climbing a hill, and you are going at a speed where brakes you're not sure how good they are, but you should know that anytime any accident can happen. But that doesn't mean you should worry of the accident. You should be aware of the accident. There is a difference between being aware and being worried. I'm assuming that people who listen to me will make out the difference and trade accordingly. As far as I am concerned, I am still buying on the declines. So thank you for joining me. Have a good trading day.